Welcome to today's section, part 4 of Introduction to Forex Trading. Before we start, please, let me give you 2 seconds for you to hit the subscribe button. Yes, that red button, yes. Okay, thank you for subscribing. Now, without wasting much, let's go straight to what we are here for today. Now, today we're talking about forms of analysis trading. Forms of analysis trading. So basically, you have 2 forms of analysis trading when it comes to Forex. So we'll be looking at them. Now, the first one that we're looking at is the fundamental analysis trading. This is also known as news trading. So when it comes to Forex, when you talk about fundamental analysis trading, meaning we are referring to trading news. You do this, there are some traders that only trade fundamentals. Only wait when there is going to be a news release, that is when they trade. So they do the analysis using the fundamental or economic event that has been released. Now, under this trading, traders analyze the forex market with respect to news, as I said earlier. Now, the economic news are the major cause of momentum or volatility in the forex market. Now, whether the news is negative or positive, traders make money either way. So here in forex, when you are buying and the market's moving in your direction, you are making profit. When you are selling and the market is moving in your direction, you are making profit. So either ways, you are making profit if your analysis is correct. So news traders, they make money either ways. The same applies to the other forms of analysis trading, whether it is positive or negative. If you're able to go along with the direction of the market, you are making profit. So let's look at the other form of analysis trading. Now you have the technical analysis trading. This form of analysis trading is when you analyze the market using indicators, charts, patterns, candlestick, Fibonacci, support and resistance, demand and supply, etc. Over here, you are dealing with a whole lot of stuff, indicators, charts, candlestick. You are reading candlestick, Fibonacci levels, support and resistance level. So it is the most popular form of trading. Traders does not solely depend on news to take a trade, but rather analyze the market using historical price actions, using historical price. So over here, you are analyzing the market using historical price, using Fibonacci, candlestick, and support and resistance level. We'll get there where we'll be looking at the charts, patterns, candlestick, Fibonacci, and support level. So for now, we are just looking at the theory aspect of it. So we have the fundamental analysis trading and technical analysis trading. These are the 2 forms of analysis trading that we have. So I have here notes. Among the 2 forms of analysis, none is superior to the other, and also none is traded in isolation. None is traded in isolation. So as you are a technical analysis trader, make sure that you collaborate or combine the fundamental analysis trading as well. In the same way, when you're a fundamental analysis trader, you should combine the technical analysis as well. Now, make sure to master the 2 forms of analysis. It's very, very important. Now, let's look at the currency pairs. We have, from the previous video, I've been mentioning currency pair. Now, let's look at what it means. Now, currency, as we all know, refers to a system of money that is used as a medium of exchange for goods and services. Example, we have the US dollar, euro, pound, etc. We have a lot of currency worldwide. Every country has a currency. Now, when you say currency pair, meaning we are combining 2 currencies together. The currency pair, we are pairing 2, or we are putting together 2 currencies. So in forex, it refers to the quotation and relative value of 2 different currencies traded in the forex market. So you know that in the forex market, you don't just trade one currency. No, it is the currency pair that you trade. You trade whilst you are buying one, you are selling the other. So we have the euro against the USD. We have the GBP against the USD Japanese yen. We have a lot of currency pairs. Just imagine the number of countries in the world and pair their currencies. Now, note, between the currency pair, the first currency is called the base currency. The first currency is called the base currency, while the second currency is called the quote currency. It's very important for you to note the difference. Now, let's look at example. When you take GBP USD, for instance, you have the GBP to be the base currency, while USD to be the quote currency. The GBP to be the base currency, whilst USD to be the quote currency. So the first three letters form the base, and the last three letters form the quote currency. Now let's look at forms of currency pairs. We have the major currency pairs as we looked at in the previous video. We have the minor currency pairs and exotic currency pairs. So we explained those pairs in the previous video. So if you don't understand, you should go back and watch part 3 of Introduction to Forex Trading. Thank you very much for watching. Please do me the honor by subscribing to the channel. Hit the bell icon so that you'll be notified anytime I upload the next part of the Introduction to Forex Trading. See you in the next video.